Professional Ethics and MIA Bylaws. In Malaysia, the bylaws on professional conduct and ethics are issued by MIA for the accountants, which is called MIA Bylaw on Professional Ethics, Conduct, and Practice.
Part 1 of the bylaws relates to professional ethics.
Section 100, Fundamental Principles and Conceptual Framework. There are integrity, objectivity, professional competence and due care, confidentiality, and professional behavior.
Section 110, Integrity. The principle of integrity is to be straightforward and honest in professional and business relationships. Fair dealing and truthfulness are also being implied in integrity. Besides, false and misleading reports shall not be made by the members.
Section 120, Objectivity. The principle of objectivity is the professional judgment shall not be compromised because of bias, influenced by others, and should be free from conflict of interest. A member shall be and be seen to be free of any interest which will cause a conflict to his or her objectivity. Other than that, all members shall protect the integrity and maintain objectivity in their judgment regardless of the service and capacity.
Professional competence and due care. A professional accountant has to oblige the duty in maintaining the professional knowledge and skill at a level required to make sure the employers or clients receive proficient professional service, and to act diligently following the applicable technical and professional standards when conducting professional services. A professional accountant is required to respect the confidential informations obtained and should not use the informations for personal gain or third-party benefits. Confidential information of the client shall not be disclosed unless there is a legal or professional right to disclose such informations. Professional behavior. A professional accountant needs to obey with the relevant laws and regulations and avoid any action that destroy the profession's credibility. They are required to take consideration of how they market their services by following the laws, not exaggerating and not comparing them with others' works.
Section 108, Treats and Safeguard. Threats usually created by broad range of relationship or circumstances that could affect the auditor's judgment. 5 types of threats: 1. Self-interest. 2. Self-review. 3. Familiarity. 4. Advocacy. 5. Intimidation. Self-interest threats. The auditor directly having interest towards his client. Threats regarding financial or other interest should not influence the behavior or the judgment appropriately. Self-review threats. When auditor involved in the preparation and inappropriately judge his own work. Familiarity. Knowing each other such as family, friends or client before. Advocacy. The auditor had been promoted or having a share in the company which may affect the judgment. Intimidation. The auditor had been bullied by the client by following their wants. This make them stress. Safeguards could prevent or lower the acceptable level for any threats. 2 categories: 1. Creates by the profession or regulation. 2. In the work environment. Category 1 includes 1. Education, training and experience requirements. 2. Continuing professional development requirement. 3. Corporate governance regulation. 4. Professional standards. 5. External review by a legally that empowered third party. Section 290, Independence. Auditor who is free from any bias regarding on what their decision or opinion that have to be taken. Type of independence. Independence of mind which can prevent from unethical. Independence and appearance perfectly lead to quality work. Section 500, Method of Practice. .501 Don't use business name to practice. 502 Not allowed to practice as SIA unless A. owns name, B. partner's name, C. firm name which form at time the operation of the act. 503. 1. Not allow the firm's name being used. 2. Should not report an opinion of statements to the outsider. 3. Should not assist by any means towards any person. 504. Not allow any person to practice in partnership with a chartered license unless he is the member of the institute. 1. Unentitled member that practice in partnership is not allowed to hold himself out as a member in public practice. B. Provide public practice services that lead persons to infer that he is the member in the public practice. 2. Notwithstanding above section, the aforesaid member can carry on the work of a tax consultant or tax advisor if the authorized to do so. 3. Who registered with institute as accountant is not precluded by para 500.51 from carrying on any practices. 500.6. 1. The member may be subject to these by law, joining whether as the director or the shareholder which offers taxation, tax advice and taxation consultancy services, provided that in doing so 1. Does not contravene any written law the member or the company. 2. The company is not described as chartered accountants. 500.62 Members participate as director or shareholder in companies in the manner as stated in para 500.61. Such member are, a. They are deemed for the purpose of those bylaw. B. This will cause the companies will comply with those bylaws if such member hold the majority interest or voting right in the company. Audit fees, commission and referral. The Malaysian Institute of Accountants issued a recommended practice guide 7, revised, on the charging of audit fees for substitution to the earlier application issue in 2007. It is compulsory for all auditors in Malaysia to follow this practice guide. The reason for issuance of this practice guide is because the expanded compliance burden, rise in operating costs and to make sure auditors' professionalism do not get affected caused by price wars among auditors. A professional accountant in public practice could earn a referral fee or commission. A fee could be earned by not give a particular service required for referring a continuing client to another accountant or other expert. He could earn a commission from a third party regarding the sale of goods or services to a client. A professional accountant in public practice could also reward a referral fee to acquire a client, where the client proceed as a client of another professional accountant in public practice but in need of specialist services not proposed by existing accountant. Standards on auditing. There are two standards of auditing in Malaysia, and those are International Standards on Auditing and Malaysian Approved Standards of Auditing. ISA. It is issued by YAPC of IFAC. ISAs are generally similar to MASA. ISAs do not override a country's regulations governing the audit of financial or other information. MIA and MUCBA are members of IFAC. Auditing standards contain the basic principles and essential procedures which must be followed on each audit. MASA standards pertaining to actual auditing practice are issued by the MIA. Two category standards that are adapted or adopted from those issued by the IAPC known as ISA. Issues by MIA to argument ISA called MASA intended to cover topics not dealt with in the ISA where particular features of the Malaysian environment warranted domestic standards written specifically to address local features. Thank you for watching.